This morning, we're taking a look at AMMB Holdings or AmBank. RHB Research attended Friday's investor briefing hosted by the lender on its proposed private share placement and came away still upbeat on the group. It kept its buy call and target price of RM3.40 versus the stock's last close of RM3.14. So according to RHB, AmBank explained there were three main drivers behind the sudden U-turn. By accelerating the capital accretion process, it can for one seek a credit rating upgrade. It can also have better bargaining power over the bidders on the planned divestments. According to RHB, negotiations are still on track and would release circa RM800 million excess capital upon completion. Having a stronger capital structure would also ease the regulatory process in declaring a dividend in the future. Now, with the private placement, RHB says we're likely to see the emergence of new shareholders, and the new line will be quite diverse, as no single individual will hold more than 5%. It says there will be no change in strategic direction post-placement, although it's not ruling out the possibility of changes in board composition. Overall, RHB says the combined effect of the settlement, placement and goodwill impairment on ROE will be positive on the significant reduction in equity base and the one-off nature of the events. All these factors plus the 0.5 times price-to-book value with more than 7% ROE makes AmBank still attractive despite the dilution. The research house believes though some investors were put off by the slew of events in the past 1 month and it will take time to rebuild credibility, the downside is limited at its current valuation. So what's the consensus? According to the latest Bloomberg data, analysts are split on AmBank. There are 2 buys and 2 holds, with the target price averaging out to RM3.15, just 1 cent higher than the stock's last close of RM3.14.